let's get started by taking you through our top story. The call to buy India gets louder. Global brokerages say it is now time to accumulate. So Sonia standing by at the big wall with all of the details on this one. Sonia, looks like after valuations have corrected, a lot of brokerages feeling more comfortable now.
Oh, absolutely. And as you said, the chatter to buy Indian equities has gotten louder over the last few days. Indian equities have received 3 positive updates coming in from brokerages who are advising clients to accumulate as valuations have reached a reasonable level post the recent correction. Now, just to put it into perspective, the Nifty 50 index has corrected over 2,000 points from the all-time high that we saw on the 1st of December to a recent swing low of 16,828 on the 20th of March. Since then, brokerages, particularly foreign brokerage houses, have turned optimistic on the market, citing reasonable valuations. So let's start with Sunil Kaul, the India strategist of Goldman Sachs, who recommends buying India on dips, advising investors to buy quality as valuations are back to reasonable levels. The MSCI India index is now trading at 19 times forward price to earnings, compared to the Goldman Sachs fair value estimate of 18.5 times. Goldman Sachs also said that they have retained their 12-month target on the Nifty 50 of 20,000 and remain overweight on sectors like banking and cement. Let's move on now to Bernstein, where Venugopal Garre of Bernstein is expecting Indian equity markets to see a quick rebound in the near term after 6 months of an underperformance to other emerging markets. He further said that the call for a rebound is premised on a confluence of tactical factors, including valuations and a bunch of macro factors as well. Among sectors, Bernstein likes financials, real estate and cement that could be the biggest beneficiaries of this potential rebound. Now, if you remember, a few days ago on the 31st of March, brokerage firm Morgan Stanley upgraded India to an equal weight from the earlier rating of underweight due to a narrowing valuation premium and a resilient economy. The brokerage said that it is bullish on India's structural growth outlook and that growth will be driven by a motley bunch of factors: digital infrastructure, empowered lending, the demographics which are improving domestic demand, as well as improving foreign direct investment. Now, Morgan Stanley intends to focus on the financials and consumer discretionary sectors in India. They have in fact upgraded the consumer discretionary space to an overweight from an equal weight earlier, and they've also turned constructive on healthcare, upgrading the sector to an equal weight from an underweight earlier. So all in all, the chatter to buy India has now gotten only louder.
All right, that's some good news coming in for the market. Thanks, Sonia, for giving us all those important details. All right.